Very special guest, Andrew Holland, Chief Executive Officer at Avendus Capital Alternate Strategies, joins us right now on the show. Andrew, good morning, and thanks so much for speaking to us at Bloomberg Quint. This is Neeraj here.
Morning.
What's the stance been, Andrew? The last 7 or 8 days, it's been a bit of a hurried move. We are back to levels and back to daily moves which seem to suggest that trade wars, geopolitical tensions, almost everything else was a thing of the past.
Yeah, I think the markets are seeing a bit of a relief in terms of the fact that Trump has come off his pedestal a little bit and is talking more positively about the China trade. So the markets are now thinking that there's going to be no trade wars, and obviously we go back to the kind of scenario of global growth again, which was possibly under threat. So that's the good news. The bad news in all of this is that commodity prices, including oil, have spiked higher, and that's really not good for India and inflation. So whilst the figures we saw yesterday in terms of the CPI, the underlying message is that the core CPI is actually still rising, and that's a concern for me. And I think if I think of a higher oil price going forward, then that's going to put constraints on the government in terms of deficit. The borrowings will have to rise, and yields are probably heading higher, and the rupees probably going to depreciate from here. So that's the kind of scenario which we're looking at the moment, which is not so good from a macro viewpoint. But then we're just entering the earnings season. And I do expect earnings to be quite good for the last quarter, so I think that will keep the momentum, at least in the short term, reasonably positive. But that said, all markets globally, including India, are looking still a bit tired, and I think we're in this kind of trading range in the very short term. So we've seen the upside the first part of this month after kind of two steep falls in February and March. So again, it should make us feel a little bit happier, but we're probably kind of done in the very short term.
Andrew, you highlighted you expect a good earnings season. We'll be getting Infosys numbers today, and also if you look at the IT pack, that's been quite active in the last few trading sessions. What sort of expectations do you have from Infosys and from the entire IT pack?
See, I think we're not expecting huge amounts of growth. I still think that whole IT industry is going through its own transition period. So I don't expect great growth, but I think the fact that valuations got to where they were just gave a bit more of a fillip for them, and obviously with the management changes, say at Infosys, people now feel that the company can move forward again. So not expecting great that we're not going to return to that decade of growth that we saw years and years ago, but at least we'll see some growth from them. But again, I would just want to emphasize here in that it's more of a play now, I think, on the depreciation of the rupee, which will probably hold these stocks or move these stocks higher in the very short term.
Are you guys trying to actively look at bottom-up mid-cap IT names? Because that pack has certainly done a lot better than the large-cap names. We do like some of the mid-cap names, but it's in terms of our fund, which is mainly looking at the large caps, unfortunately we have to miss out on some of those. But some of the mid-cap IT has been an area which has done very well, and I think will continue to do very well. So I think that's probably where a lot of investors will continue to focus. Whilst we'll get reasonable results from the big players in IT, I still think we're a few quarters away from them kind of resuming strong growth. So it's going to be the mid-cap plays which probably have the better upside in the very short term. By the way, look at some auto names. Escorts, for example, has jumped now and is trading very close to the day's highs and life highs for itself, 3% higher. There is strength in Apollo Tyres, the management that we were talking to yesterday, and that stock is nudging the mark of 300, again trading very close to the new highs for itself. Andrew, I heard you mention that your fund is predominantly looking at large caps. How are you approaching auto then? Are you looking at the listed two-wheeler, four-wheeler, rather than
the large cap two-wheeler, four-wheeler names, or are you also looking at suppliers, because that's a fairly large pocket which is benefiting from the auto surge and in a meaningful way, and the stocks are performing as well?
Actually, you're correct. A little bit of both, actually, but very selective, both in the the kind of four-wheeler and two-wheelers in terms of who we want to invest in. There's some companies which are continuing to increase market share, have new model introductions, and that's doing very well. And on the two-wheeler side, again, there's I think it's showing now who's becoming the leaders, and those who are focused. Purely on the kind of a few brands within their segments are doing exceptionally well, rather than those which are just introducing newer products which kind of confuse the consumer. So that's what's really happening within the two-wheeler, and of course CVs look as though the cycle's continuing there. So the whole sector, I think, is still looking good, but obviously you have to be very selective. And on the auto parts, it is unfortunately kind of still quite a lot of mid caps there. But for some of the larger caps, you're benefiting from both growth in India and growth offshore as well, in terms of the US and Europe. So like a few of the names there as well.
Well, just want to address the fertilizer pack. There's been a substantial rise that we've seen for most of these stocks. Pull up Madras Fertilizer, that's up nearly 8% in trade. Fact 2 is trading with gains of almost 7.5%. That's fertilizer and chemical Travancore. Besides that, RCF, Deepak, Chambal, you name it, and all of these stocks are buzzing today in the opening trade. RCF is up nearly 4%. Deepak Fertilizer also trading with gains of 2%. So watch out for this space. Andrew, there's a lot of volatility that one has seen, not only for the Indian markets but also for the global markets. And we've seen a lot of news flow which comes from global markets seems to be impacting our markets as well, from the likes of issuing sanctions on a couple of companies in Russia. And we've seen how the aluminum makers like Hindalco, Nalco, you name it, and all of them have seen a sudden surge. And obviously the reason was prices on LME are also rising for that. What's the overall view? Because as a pack, metals has been an outperformer in the last 1 year. Do you see this outperformance continuing in 2018?
Well, actually, if you think about it in two ways. One, if there's a trade war, or any part of a trade war, then this is always good for commodity prices in particular. So it's a bit of a win-win situation, because if there's no trade war, then global growth will continue to be strong, and that will be good for commodity prices. So I think the put option is there in terms of what's happening either with the trade war or the economic growth. So I think metals look good for a further strong run. My worry is obviously if oil prices go towards 80, this is not good news for India. And I think the other thing I just want to add in terms of what could be add to volatility going forward is if you went through the Fed minutes, which were released earlier this week, then the new Fed Chairman Powell is really saying that all of the people, all of the Fed representatives are saying that they expect growth to pick up strongly in the US, and therefore the rate increases might be more than just the three that's been indicated. Now, that I think the markets have not really kind of taken into account. And if you look at the 2-year bond yield in the US, it's about 2.4, 2.5% versus a 10-year at 2.8. That's a very small differential for your 2-year and your 10-year. So if that becomes inverted because of higher interest rates, that could spell a bit of problem and volatility for markets. So that's something to watch out for. But I think, again, the market's ignoring, because of what's been happening on the trade front, what's happening with what the Fed said and what the indicators are. So if we're going away from this trade war with China, then interest rates could actually be increased a little bit even more than expected, or more frequently than expected. And I don't think the market's baking that in. So you might have a rerun of February at some point during the next 3 or 4 months.
Well, Andrew, one only hopes that it is not at a pace which takes everybody by surprise in a negative way. a small surprise here and there might still be okay. Just one last point in light of all of that, what do you think happens to bond yields and thereby to the financial names? Because if indeed the pace is quicker, it will have an impact on emerging market yields.
Well, I think this will play out over the next 3 or 4 months. So it's difficult to say when that will happen. But in the very short term, until that does play out, the RBI in their credit policy came out with this Goldilocks type economy for India, where we get strong growth and virtually no inflation, which is surprising to me. But anyway, in the short term, it might play out. But I think the risks are on the upside in terms of inflation than they are on the downside. So therefore, I was a bit surprised at that. So I think, given that you have the monsoons as well still to play out, I thought that was a pretty dovish thing of them to be doing at this point, which has brought bond yields down, as we all know. But they have ticked up, and if I'm correct, then I think bond yields are probably going to tick higher again, probably towards that kind of 7.6, 7.7 levels.
All right, Andrew, we'll leave it at that note. Appreciate you joining us this morning and taking us through your views on the markets.